Hello viewers, hoping all of you are doing good and busy in preparation of upcoming examination. So I am here to help you in your preparation, and today I have taken the topic partnership dissolution. And in examinations the question frequently asked dissolution chapter of partnership form. In the dissolution, business is dissolved, the operation of partnership form is stopped, break up, discontinuing of the partnership form. And in this process, under various situations, like all partners are solvent, some partners are solvent, some partners are insolvent. But when all partners become insolvent, then how dissolution problem is solved? So today I have taken that up problem based on when all partners become insolvent. So insolvent means not having the private property, private cash, and the partners are unable to bring amount in cash to meet the liability, to meet the loss, to make up the loss suffered by partnership form. And at that time the partners decide to dissolve the partnership form, and the operation of the partnership form hence comes to an end. And in this process the partners, they realize the assets of partnership form and pay all the debts, liabilities of the partnership form, and if any left surplus, then they are entitled to receive from the partnership form. So it is clear that the dissolution of partnership form, the meaning is also we can learn the process of breaking up and discontinuing a partnership business is called dissolution of the firm. The dissolution of the firm spells an end to the business. So just I told you that the operation of the business is dissolved, discontinued, and the business is closed down. The dissolution of the partnership. In this connection, the following accounts are prepared by partnership firm to close off the firm. Realization account is prepared, partners capital account, cash account or bank account, whatever the value given, creditors account, deficiency account. So this extra account, this is called a deficiency account, is prepared where here given where all the partners are insolvent, and especially when there is a loss amount and there is a liability amount payable to creditors, banker or other money lenders, which was taken by the partnership firm for the purpose of carrying on the business operation of partnership firm. And at that, for this the partnership firm is now repay the loan taken, and if the loan amount are not fully paid up and there is a shortfall in payment of amount due to non availability of cash in business, then the insolvency happens and then the deficiency account is prepared. Now in these connections here I have taken one problem where all the partners become insolvent and there is a partnership firm is to be dissolved, and what are the accounts prepared. When all partners are solvent or any one partners insolvent and the remaining partners are solvent, then the deficiency account is not prepared. Creditor's account is also not prepared or not required to prepare normally. Only for realization account, partner's capital account, cash or bank account, whatever the balance given in the question, accordingly is prepared. So question is on the screen on dissolution of partnership form when all partners are insolvent. A and B were in equal partnership. Their balance sheet stood as under on 31st December 2024 when the firm was dissolved. So liabilities side, amount, assets, amounts, this is the balance sheets. And the creditors having balance 3,200, A's capital having balance only 400 rupees, and machinery and plant 1200 rupees, furniture 300, debtors 500, stock in trade 400, cash balance having a business partnership form is only 180, and this is the debit balance of B's capital account or drawings 1020 rupees. This is the balance sheet. And what are the additional information? So let's see. Partnership had realized the different assets at different prices which would be used to pay the debts of the firm. Hence, by selling of these assets, amount received given here, machinery rupees 600, furniture of rupees 100, debtors rupees 400 received, stock disposed at rupees 300. Realization expenses amounted to rupees 140. A's private debt estate is not sufficient even to pay his private debts. So A had contributed nothing as he has no private estate even, whereas in B's private estate there is a surplus of rupees 140 only, and he can bring, or partner B can bring only rupees 140 rupees in partnership form, and A cannot bring anything in partnership form. Because of unlimited liability, he has to bring his private cash, private property to meet the partnership form's obligation liabilities. So here and now give account to close of the form. Now this is the solution, and the various assets, sundry assets from the asset side of the balance sheet of the question should be transferred. So this is the realization account. First we have to prepare in dissolution of partnership form, and the various assets should be transferred to realization account on the debit side, and this is the sundry assets. So various assets are in the questions at book value. Machinery 12,000, furnitures 300, debtors balance 500, stock balance 400, so are given. So the total of this for assets 2,400, and by realizing of these assets, partnership firm has received, this is the buy cash account, and this buy cash account is first the assets shall be transferred from the balance sheet to realization account on the debit side, and after the amount received on sale of these various assets shall be written on credit side. Here the credit side buy cash account or bank account. So like machinery is given in the question, realize rupees 600, furniture 100, debtors 400, and stock 300. So total amount realized by selling of these different assets rupees 1400. So this is the cash transaction. And now expenses on realization is given in the questions rupees 140. This is the debit side. Expenses on realization always on debit side of realization account to cash account realization expenses. Now on credit side 1400 rupees only, and on debit side 2540. So debit side is greater than credit side amount, there is a loss on realization difference. So the sum total of this is 2540, and balancing of this account 2540, and the difference should difference represent loss, and a loss on realization, and it is to be transferred to partners capital account A and B. Since it is given in the question that A and B in equal partnership, so the loss on realization distributed equally, and this is 1/2 A and 1/2 A. Their profit sharing ratio is 1:1, equal partners. So equal partners ratio is always 1:1. So 1/2, half of 1140, 570, 1/2 of 1140, 570. So each partner is entitled to receive equal amount. If there is a profit, equally profit will be shared equally, loss will also be shared equally. So this is the realization account. So cash transactions, this is the cash transaction, this is the cash transaction. This cash transaction shall again, when we prepare the cash account, and this cash will be transferred to cash account. One is on this cash will appear debit side, this cash will appear credit side in cash account. Now capital account of partners. In the given question, the liability side of balance sheet, partner A capital is showing 400 rupees, and on the asset side partner B's capital showing 1020, and it will be on liability side showing amount, credit side of partners capital account, and asset side showing amount, it will be a debit side to balance BD. This is 1020 given in the questions. And a loss on realization debit side shared by A and B equally. So this is the loss on realization, 570 rupees, 570 rupees, just now I had showed you. And by cash account, that is the B has private estate and only he can give only 140 rupees, so in B column, and A column, A has brought nothing amount from his private estate to meet the loss deficiency, so his A's column is nil, blank. The transactions relating to partners capital accounts are only these two: opening balance and loss on realization, and additional cash brought by partner B in B's column. Thereafter we have to balance the account. First we will balance the A's column. So A's column having on debit side 570 and credit side having only 400 rupees. That is the opening balance. This opening balance. So 570 minus 400, 170. So this amount he is supposed to bring into partnership form, but since he is declared insolvent, so he could not contribute even 170 rupees towards his debit balance capital, towards capital. So as A's capital account is having debit side more than credit side by 170, so this is the deficiency, and A must bring this amount into partnership form. Since A is declared insolvent, so he has nothing, any amount, so he could not bring this 170 rupees, and this 170 rupees shall be transferred to deficiency account. Now B's account. B debit side is 1590 and credit side is only, he is having 140 rupees. So difference, debit side is more, 1590 minus 140, so 1450 he need to bring this 1450 rupees into partnership form, as he was declared insolvent and he could not bring this amount. So that is, this showing is the deficiency, and it is also transferred to deficiency account. Here, deficiency account. So A fails to bring 170 rupees even, and B fails to bring 1450 rupees, and both the amounts are transferred to deficiency account. Next, creditors. In the liability side, creditors balance appearing 3200, and that balance will appear as opening balance here, like by balance BD 3200. Same amount showing by balance sheet liability side, creditors 3200. And to cash account, the amount paid to creditors is 1580. And how to know that 1580 rupees only paid to creditors? So now if we prepare the cash account, then we can say the cash balance available to pay creditors. So for this, cash account is to be prepared first, then creditors account. You see how it is to be prepared. In the given question, balance sheet asset side, cash balance is given 180 rupees. So this will appear as to balance BD. Assets, cash received by business is 1400 rupees. So this 1400 rupees you will find in the realization account credit side. And in the realization account, debit side, there is a cash account as a realization expenses. So this is the cash transaction, cash gone, and in credit side 140 rupees. And in the partners capital account, only B brought 140 rupees cash. So this is the B's capital account. All cash coming debit side and all cash going credit side. So on realization, when realization expenses paid, cash gone, credit side. And now see the total cash balance available. When we total it, 1720 rupees total cash balance. And out of this 1720 rupees, realization expenses paid 140. So balance only left rupees 1580 rupees, and this amount is available to pay to the creditors, and this is the creditors balancing figure. This is the value calculated. So that means the total amount payable to creditors is 3200. But partnership firm has cash sufficient balance only 1580 rupees. So partnership firm able to pay only 1580 rupees. The difference is will be transferred to deficiency account. The difference amount. Okay. So this is the cash account. Opening balance, real by amount received by realization of assets, and amount brought by B, total 1720, and minus realization expenses. The balance left is available to pay to creditors. So balance left available is 1580 rupees. So this 1580 rupees you will find in creditors ledger account. So this 1580 rupees, and let's see here. So here creditors balance BD 3200, and cash just to be calculated in the cash account at this cash account, creditors amount 1580, and this will appear on debit side of creditors account 1580, this cash account 1580 rupees. And the deficiency, the partnership firm fails to pay the amount 1620 rupees, and it should be transferred to deficiency account. The partners capital account we found a deficiency account. In creditors account also we found a deficiency account, and by taking these two items of deficiency we have to prepare deficiency account. Now I will show you the next preparation of deficiency account. In capital account we found credit side the deficiency account, so in deficiency account debit side it will appear. Let's see here. This is the deficiency account prepared, and B capital column credit side deficiency, and that will come here in debit side. Here 170 deficiency, and B's capital 1450 deficiency. And in the creditors account we found a deficiency account, creditors account, and this is the credit side 1620 rupees. So now a deficiency account it will be automatically equal both side. So here this is the 1620 debit side, and this is the 1620 credit side, so both side equal. Okay, so keep watching and don't forget to like, subscribe and give your comments. Thank you very much. Jai Hind.